Toronto's new home sales plummet to 1990 levels, raising fears of a market collapse. The Greater Toronto Area's, GTA, new home market has entered a period of unprecedented decline, with sales volumes in 2024 falling to levels not witnessed since the real estate downturn of 1990, according to a report by Better Dwelling published in February 2025. This troubling milestone, underscored by data from Altus Group and the Building Industry and Land Development Association, Build GTA, signals potential distress for developers and prompts questions about whether the region's housing sector is on the cusp of a broader collapse. As inventories swell and buyer interest wanes, the parallels to Toronto's last major market correction are striking and unsettling. The statistics paint a dire picture. In 2024, GTA new home sales totaled a mere 9,816 units, a 47% decline from 2023 and 69% below the 10-year average. December capped the year with just 347 transactions, down 40% from the previous year. Condominium sales plummeted to 101 units, a 63% drop, while single-family homes recorded 160 sales, a marginal 1% decrease yet 62% below the decade's norm, per Build GTA. The trend persisted into January 2025, with condominium sales lagging 77% below average, as noted by industry observers on X.com. Meanwhile, unsold inventory reached 21,787 units by year-end, 2.5 times the 2021 level, reflecting a significant oversupply across the region. This slump evokes memories of 1990, when a speculative bubble burst, leading to a 27% price decline by 1996, and a 22-year recovery in real terms, as Better Dwelling documented in a 2017 analysis. Despite a 13% population increase in the GTA, from 2016 to 6.8 million by 2021, per Statistics Canada, demand has failed to keep pace. Better Dwelling cautions that this imbalance foreshadows far-reaching implications, suggesting a potential repeat of the protracted downturn experienced decades ago. Several factors underpin this stagnation. Mortgage rates have moderated, with the Bank of Canada reducing its benchmark from 5% in 2023 to 3% by February 2025, according to BN and Bloomberg. However, affordability remains elusive. The median household income of approximately $80,000 cannot sustain purchases of condominiums averaging $1 million or single-family homes at $1.55 million, down 32.5% and 32.6%, respectively, from 2022 peaks. Economic uncertainty exacerbates the situation, with RBC Thought Leadership, February 11, 2025, highlighting U.S. tariff threats under a renewed Trump administration as a looming risk to Ontario's economy. The Financial Post, February 18, reported a 3.3% national sales drop in January, with new listings up 23%, while GTA resale listings surged 70.2% to over 20,000, yet sales fell 7.9% per the Globe and Mail, February 12. A slight 0.4% price rise to $1.07 million reflects speculative bidding rather than robust demand, as Better Dwelling noted on February 6. For developers, the situation is increasingly untenable. Construction costs in Toronto have risen 107% since 2017, 81% nationally, according to Remy Network, while pre-sales, critical for project viability, have dipped below 50%, a 20-year low per CIBC's July 2024 analysis. A threshold of 70% pre-sales is typically required to commence construction, rendering the 9,816 sales in 2024 insufficient to sustain new developments. The Toronto Star, February 21, described January's new home sales as a near-record low, attributing the decline to buyer exhaustion. In response, financial institutions are intervening. The Financial Post reported Gintai Capital's $53.7 million acquisition of a Kitchener project, a sign that lenders are stepping in to mitigate losses, a precarious shift that smaller developers may not endure. Investor retreat further compounds the crisis. Accounting for 70% of Toronto condominium purchases, investors are exiting due to negative cash flows, with rental income failing to offset mortgage costs amid stagnant prices, per CIBC economist Benjamin Tao. Homebuyers, meanwhile, face financial constraints or adopt a wait-and-see approach. A brief uptick in national sales, up 19% in December 2024 year-over-year, per CREA, proved fleeting. Social media platforms like X.com, February 20th to 22nd, reflect widespread concern, labeling the market a freefall, at a 34-year low, echoing Better Dwellings assessment. Remi Network warns that unprofitable projects threaten the construction pipeline, endangering 150,000 Ontario jobs, Statistics Canada, and Canada's goal of 3.5 million new homes by 2030, CMHC. The 1990 downturn offers a sobering precedent, a gradual decline with lasting consequences. Current oversupply, 21,787 unsold new homes, and 20,000 plus resale listings, mirrors that era's dynamics. The Toronto Regional Real Estate Board's projection of 76,000 sales in 2025, CBC News, February 5, appears optimistic against this backdrop. Potential recovery hinges on sustained low rates, prompting a late 2025 demand increase, as CMHC forecasts, or government intervention, such as British Columbia's 2024 pre-sale deadline adjustments, Financial Post, April 26. Yet, looming tariffs or an economic downturn could extinguish such prospects. Adding to the complexity, demographic shifts are subtly reshaping the market's trajectory. The GTA's aging population, with a median age rising from 39.7 in 2016 to 41.2 by 2021, Statistics Canada, suggests a shrinking pool of first-time buyers, traditionally a backbone of housing demand. Younger cohorts, burdened by student debt and precarious employment, are increasingly priced out, with a 2024 Urbanation report indicating that only 15% of GTA renters under 35 can afford to transition to ownership. This generational disconnect dampens turnover in the entry-level segment, further clogging the market's arteries. Compounding this, foreign investment, once a significant driver of Toronto's condo boom, has waned. Post-pandemic policy tightened foreign buyer restrictions, and a 2023 federal ban on non-resident purchases, extended into 2025, per BN and Bloomberg, has chilled international interest. While domestic speculators filled the gap briefly, their retreat amid falling returns has left a void. Urbanation notes that foreign ownership in new GTA condos dropped from 12% in 2017 to under 4% in 2024, a stark reversal that underscores the market's reliance on local momentum that is now faltering. The ripple effects extend beyond economics into the social fabric. Housing advocates on X, February 23, decry the paradox of rising homelessness, up 10% in Toronto since 2022, per city data, amid a glut of unsold units. This disconnect highlights a misalignment between market offerings and actual need, with high-end condos dominating supply while affordable options remain scarce. The CMHC's 2025 outlook warns that without targeted policy to bridge this gap, the GTA risks entrenching inequality alongside economic stagnation. Presently, Toronto's new home market faces severe strain, with sales at historic lows, inventory mounting, and market confidence faltering. While not yet a confirmed repeat of 1990, the similarities are unmistakable, warranting close attention as this narrative unfolds. If you found this video and information useful, please smash the subscribe button and hit the notification bell so we can keep providing you with timely information you can apply on a daily basis.